If you're thinking of buying a house this year, pay attention to this video because I'm going to talk about something that so many people continue to ignore when they buy a house. So many home buyers start off their process shopping around for the lowest interest rates. Realtors tell you to look for that. Your friends and family tell you to look for that. But I think that's the worst way that you can go about shopping for a lender. What you should be asking your lender is about the best strategy on how you can finance your home, looking at different options and seeing what works best for your scenario. You can see on this chart here that credit card delinquency balances are starting to pick up, and it's been the highest that we've seen in a long time. So many of you are buying properties as your first home and your primary residence, and you're maxing yourself out when it comes to your debt to income ratio. The thing you have to understand is that as a mortgage lender, we qualify you off of your gross monthly income. That's before your taxes come out, your 401k, any of your other expenses comes out of your paycheck. That's what the lender's qualifying you on. And I've also made videos that talked about how much more expensive it is to own a home today. And that's not including all of your daily living expenses, but when you also factor in your property taxes and how much that's increased, your homeowners insurance, all of these numbers start to creep up higher and higher and higher, which raise your debt to income ratio, which can make you house poor. And don't even get me started if you bought a new home, because your property taxes jumped up quite a bit and you weren't even prepared for that. And so many people bought homes in the last few years with the whole notion that they were going to be able to refinance. We heard it time and time again about the buy now, refi later, marry the house, date the rate. But look at where mortgage rates are today. Yes, they're starting to come down, but it's not enough for it to make sense for a lot of you to refinance yet. So if you start missing credit card payments, your score is going to get tanked. Then the odds of you trying to refinance are going to be very, very difficult for a lender to approve you if you're delinquent on your credit cards and your credit score is in a terrible spot. So if you're buying a home, you should really be talking about debt management strategies so that way you don't end up a statistic like this. Finding ways to create cash flow or to have cash available for yourself. And if you can possibly do it, pay your home off in years instead of decades. We have a strategy that we use with all of our clients and we teach it to them so that way they can be debt-free and not a slave to the bank. So if you don't have a strategy and your back's against the wall and you're starting to think that you might not be paying your credit cards, think twice or reach out to your loan officer or reach out to me and my team, and we'd be happy to put a plan together so that way we can get you into a better financial position and get you out of the stress that some of these mortgages or credit cards are probably causing you and your family.